Good evening, everybody. What is going on? A lot of regulars here. Before we get to it, please take a moment, read the disclaimer. We are not financial advisors. We have no idea what your situation is. Please take everything we say with a grain of salt. Do your own due diligence. We only know our own situations. Most importantly, don't make any financial decisions based on something you hear on the internet. Thank you very much. Look at all these regulars. Chels may not have been first today. Dookie Pie's here. PB's here. Chris is here. What's going on, Chris?
My old man beard is coming out, bro. I need to shave.
Listen, I'm in the same boat. What can I say?
Yeah, but you are old. I'm not.
We're like the same age.
Which is kind of sad if you think about it. We should not have as many grays as we have right now. Put me on the other side, Steven. Put me on the other side.
It's called working for a living.
It's just called the market stress, man. Every day it's a new
Market
thing.
stress. Am I the only one that doesn't get stressed out with this shit?
I mean, maybe.
Zero stress.
That's great. But I don't know. I try to not stress, but when you have like so many moving pieces happening all at the same time. So, yeah.
Well, before we get into private equity, oil touched 120 and is now under 90. I mean, this is one wild ride. I saw a lot of people saying yesterday, time to buy oil. Time to buy oil was last week. I mean, and I don't even know. Look, I don't know what's going to happen, but this is so volatile. This could drop back to 60 in a week. This could go over 100 in a week. Anything can happen.
Yeah. Yeah. Unfortunately, this is one of those situations where everything is so fluid. Everything's moving. So I don't know if I don't know which direction that the market's going to take it. I do know that there is a threshold to what the Trump administration's willing to take. And I think we're close to it. So right now the focus is on some level of de-escalation. And I think that gradually we'll move back down to the 60s and 70s on oil, but it'll be a while before it happens. It's not going to happen overnight.
Yeah, look, last week the U.S. built a surplus. I mean, anything can happen with this. So it's going to be interesting. If oil's under 80, I'll be happy. I don't want to go into Wednesday oil over 80 because we run the risk of big consensus numbers for next month's CPI, which is not what I want to say.
I mean, yeah.
So anyway, let's get to the topic at hand. And then I also want to go into tomorrow's earnings. So private credit, Chris, something you and I have talked about in the past.
So let's be very specific. Private equity, private credit, two different things, and the only thing that's like common about those two is that it's private. So all of this stuff is done outside of the public markets, which means that it's not nearly as transparent as what you see out there. So like, let's say you're a bank right now. The banks, when they do their reporting and everything else, you can pretty much see like, this is what they own, this is how much deposits that they have, this is what's in cash, this is what's in treasury, this is what's in loans, blah blah blah, all that stuff. With private equity and private credit, all of this stuff is basically what they tell you, and it's your job to figure out what the actual value of that underlying asset is. So, whenever private equity the way that private equity works is that they take money from rich individuals, from endowments, from sovereign wealth funds, and they invest the money on behalf of those entities. And they invested in different things out there that are credit vehicles like loans. They invest in housing, like multifamily housing. They can invest in companies where they can actually lend out the money to companies. So all of those things are something. So I'd love to hear what your take is on the current private equity and private credit situation.
Yeah, I mean, look, it's something that I don't buy these companies directly. I go with the subsidiaries, the BDCs. And the biggest private equity, I mean, you could consider BlackRock in there to a degree. I don't. I consider them Blackstone, KKR, Brookfield to a degree with their asset management, Ares Management, and Blue Owl Corporation. Some would also put Carlyle Group in there. I don't own any of those directly. So I own Ares Management, BDC, ARCC. I also own KKR's BDC, FSK. And this quarter, huge boom because private equity in 25 delivered an incredibly strong year, had record deal values of 904 billion globally, which was up roughly 44% for the year. And a lot of people have been looking at this is where they want to be because the asset class has grown to roughly 2 trillion, and some analysts have this projected to grow to 3 trillion in 28. And it's become what used to be a niche to more mainstream because you have brokers such as Morgan Stanley have access to private KKR funds. And I know other brokerages have access to other funds also. That's all private equity. And they have historically had a good rate of return. One of the problems that we're seeing is a lot of them have invested in SaaS. Typically, a lot of them invest in smaller companies and all private companies. Obviously, there are some really large private companies that they are invested in, but a lot of the companies in the private markets are smaller to middle size. And one of the biggest drawdowns or problems is if you need to liquidate, it's not always easy because there's no public market for it. And that's where these funds can really take a haircut. I get a little skeptical when I don't have numbers of the underlying holdings to look at. So I'm
Can you share my screen? Sorry. Can you share
yeah,
my screen? Yeah. Yeah.
yeah. KKR is huge company.
So KKR has assets under management about 500 billion. Um, Blackstone is about trillion. Carlyle 400 billion, Apollo 600 billion, Bain Capital 180, TPG, and then you have all these other smaller ones that are out there. So the key here is they they have a little bit of money that's their own money, but their job is they invest on behalf of everyone else, right? And that's where things
Pensions,
get a little,
endowments, et cetera, et cetera.
yeah. Yeah. So if you think about it, these are the areas what they kind of invest in, like technology and AI investments, ESG, sustainable investing, whatever, globalization of capital. So all of these things are what they focus on. So yeah. So are you dumpster diving into any one of them?
So I've considered Blue Owl several times. I think the drawdown's immense right now.
Mm-hmm.
So I started putting a few things together and I started looking at how much revenue these companies are generating. Some of them are freaking huge.
Okay.
So let me make this bigger. And look, some people don't consider BlackRock. I just threw it in there. But Blackstone, huge company, market cap 131 billion, generating 14 billion revenue, high price to net income. A lot of these companies are not cheap by any means on profitability on net income. Now, that's much different when you get to earnings per share, which I will pull up. But there's a couple of these I like. And when I look at Ares Capital, this is always one I like. I think they're always a great company. And when I look at the forward numbers, I couldn't get Brookfield's 2028, but they all have 20 to 30% EPS forward growth. And most of them, except for BAM, Brookfield Asset Management, is trading at less than 20 times this year's earnings. And I think some of them have gotten hit because of the fears around the SaaS investments that they made are being cannibalized by the data center investments that they're making. And look, Blue Owl has come down so much, yet the market is still pricing in growth. They're still pricing in. They're going to do 94 cents of EPS this year, $1.10 next year, and $1.28 the following year. So that's starting to look really interesting with a dividend yield that's over 10% because of how much it's fallen. Now, that's also one that is getting killed by the SaaS narrative, though.
Well, one of the things that you have to clarify to everyone is why are they trading at such big discounts? What's the issue that they're all having right now? Like, why are you getting such a great deal right now?
Yeah, one of the big things, like I said, they've invested in tech companies. Mm-hmm. And tech companies are in the headline and in the spiral that they are getting displaced or disrupted by AI, and they're cannibalizing themselves with their investments in data centers. That is a very big thing right now with them. There's also returns pressure, and they're having multiple compression based on that with the general partners tangible alpha right now.
So one of the things about them is that some of them have been, everything works on trust, right? So you give someone $1 billion, you expect them to deliver you alpha, and that alpha comes back to you in the form of returns and everything else. Now, let's say you want your money back. You said, fuck it, I want my $1 billion back. If the company has to sell illiquid assets to get that billion, they're going to be sold at a discount. So one of the things that you're seeing is Blackstone just had to actually do this. Blue Owl had to do this, where there were a couple of private, like public funds that they had. They were hit with early redemptions, and they were able to meet those redemptions. But people are getting nervous that, hey, the underlying assets may or may not be worth what you guys are staying. And a lot of times in the private markets, it's more gray than in the public market. The public markets, it's very easy to quantify, but when it comes to a private market, so if you invest in a company, like let's say a private software company, and you invested $100 million into it, if you try to sell it, that's when you're going to actually know when what the real value of that company is, right? So remember, the value of whatever someone says is not the same as what someone is willing to pay for it. And the only time where you'll know how much it's worth is when someone else tries to buy it. So that's just one of those things to keep in mind.
Yeah, and also rising defaults normally hits the private markets first.
Yeah.
That's always a big thing. The growing pick, there's late cycle behavior. I mean, it is not for the faint of heart, and you don't have the visibility into their holdings the way you would a mutual fund or an ETF.
Yeah. Like for an ETF, you could just take the portfolio composition, how much they say that they have, and multiply it against the current share price, and you know exactly what the NAV is. The NAV is published almost every day. With this, you're not going to get nearly the amount of transparency, and whatever transparency they do provide is going to be kind of like a trust me thing rather than a real thing. And a lot of times people, what ends up happening is they have exposure to certain asset classes that are not traded as frequently, so you don't know what the mark to market is. So as an example, like let's say you loaned a company money to buy a building, an office building, and you lent them $100 million. This was pre-COVID. 5 years goes, they, their need to refinance, and you say to them, hey, listen, I need that money back, and you need to refinance. Now they'll just say, hey, listen, here's your keys back, and they'll give it back to you. Now you have to go out there and try to sell it. And if you gave them $100 million and, now they give you the keys, it doesn't mean that you put it on the market, it's going to go for $100 million. It could go for 20 million, in which case now you're eating an $80 million loss. So on your balance sheet, you could have had something that says, hey, someone owes me $100 million. Now we just figured out that it's not actually worth $100 million. It's only worth 20 million. So that's where you have to take an 80% markdown And that's one of the challenges with certain private equity companies and the exposure that they have to certain asset classes, where the asset that they might be stating is not actually what the asset is worth. Now, the thing is, at some point, the discount becomes too attractive. So even if they're lying at the periphery or they're misstating their mark to market, so let's say, it's not worth $100, it's only worth $90, right? That still means that you're getting value if you're buying it at 70 cents on the dollar. So the market is over doing the risk. So I think with a lot of these private equity companies, once things stabilize, they could actually be really good investments long term.
Yeah, and like you said, redemptions is a big thing. And it's the same idea as somebody who has a margin call and has to sell into weakness. If they don't have the liquidity in the fund, they have to sell assets if the lockup period's over to generate the capital to pay out. And they may not always be able to find a buyer for their assets because they're illiquid. And the private market, they're only worth what somebody's willing to pay for them. So I don't know. I tend to stay away from it. I don't have the bandwidth to really do the research, and it's very hard to do the research in these. Blue Owl is just one of the ones that I happen to think is overdone to the downside. And because it's got an 11.96% yield right now, I'd be willing to take a bite at it only because if they cut the dividend in half, still getting paid 6%.
It depends on their distributable earnings, right? Someone mentioned in the chat, and I think that's one of the things. Like, did you get a distributable earnings per share for all of them? Because I think that's more important. Because remember, there's a lot of stuff that's intangible that they can write off.
Yeah,
and amortization.
They pay out a dividend of 90 cents, and they're expected to do 94 cents this year. I mean, look, it's high. And the idea is that they could cut the distribution this year. They definitely could. It's pushing up against it. It's like a 94% coverage ratio, which is not what you want.
Yeah.
But because of how big the yield is, I'd be willing to take a stab at it. It's just not, I like the BDCs more.
You could all just buy straight up corporate debt too. That's another option, right?
Are you looking at any PE companies directly, or better yet, PE funds? I know one of my buddies at Morgan reached out to me, asked me if I wanted to get in. There's 3 KKR funds that they have right now that are pretty interesting. I haven't decided if I want to do any of them yet.
I don't know yet. I don't know yet. Like, I think I find that there's probably value in just no-brainer things right now, and if I run out of those, then maybe like Microsoft where it's trading, Adobe where it's trading. I think those are such no-brainers. Even the cruise lines right now, they're trading at pretty good discounts to what the future earnings potential are for some of them. And I think once this situation with the Middle East resolves, I think most of them will go back to trading where they were before. So right now is a good time. Yeah, Meta, Amazon, like. You don't have to take a lot of risk right now to get a good return this year. So I think it's better to just high class the portfolio instead of trying to, find like the crazy like tech company that's revolutionary and does this, that, and the other thing,
Yeah, like I said, there's so many reasons why I'm not doing the whole PE thing. And I also don't do private placements. There's something about the VIG that those companies charge that rubs me the wrong way. I mean, if you've ever gone to, I don't want to say any companies' names, but if you ever look at the companies that have SpaceX shares or have shares of Databricks or OpenAI, there is always such a high fee that they take when it goes public that it's always just rubbed me the wrong way. Always has.
That's because of the structure that they have, right?
Yeah. Now, in hindsight, I should have bought SpaceX shares 2 or 3 years ago when I had an opportunity to. But they wanted, I forget exactly what it was, but they wanted something like 15% of the investment when it goes public.
Yeah.
and a 2% a year carrying fee to manage the account. And I was like, no. I probably should have said yes, but I said no.
Yeah. Sometimes you feel like a sucker with a lot of these things. It's just like, am I giving up too much? But if you want the access, you have to pay sometimes.
You
I know
got
a
to pay
bunch
for
of
the
people that have,
access.
yeah, some people I know that they have access to like Andrew, and they got it when it was half the current value
Yeah.
right now. So, it's just depends. Like I said, there's a lot of great opportunities in this market. One of the things that I've been doing is I've been using Claude to build certain like custom indicators that I wanted, and I realized that the only way I was going to get them is by paying for an API call, right? So basically, there are data brokers out there that have data that's live, and if you want like an API, like if you want access to that live data, you got to pay them, right? And so I'm like, interesting. So I think when it comes to
What
AI,
type of data?
it could be commodity pricing, it could be
So
economic data, all of those
don't
things.
say what broker you use, but check if your broker has an API, because the broker that I use has a free API if you have a certain amount of
Really?
money with them. Yes.
Really?
Yes.
Interesting. Who?
Yes. I'm not going to say
Who?
it loud.
Just text it to me. Shit, I need to know. I don't want to pay for this data myself. This would be awesome to
Look
have
at
that.
private.
Okay, let's see. Oh, okay, yeah. Interesting.
And
Okay.
if you go to that page, you can build your own stuff.
Why are you hiding it? This is public
Who's hiding
information.
it? I just found out.
Yeah, but you just sent to me private. Like you're not gonna I'm not gonna say. Like, what's the point? It's not like this is
I'm
like
not
some
trying
kind
to
of
get
like.
hacked, Chris. I'm not trying to get hacked.
Yeah, but it's not secret. Like your API, keep your API key to yourself. But you could
Steve's
say which broker.
gatekeeping hard.
Yeah, like
Gatekeeping.
you don't need to do that. You don't
No,
mind if I share people, do I?
no, I don't care. It's a running joke.
Yeah, yeah. It's
So
Charles
Schwab has a
Schwab.
developer
Yeah.
portal. Um, Interactive Brokers has a developer portal also, I believe, with more APIs than Schwab, I believe.
Okay. Interesting. I had no idea, man. This is actually really
Yeah.
interesting. Yeah. Okay. Develop native and solution. What kind of stuff do they have? Tax data, trader.
So the
Commercial.
trader APIs have they have all the option data. They have all
Mhm.
the real-time data. It takes 2 or 3 days to get approved.
Okay. Create your own personal use application.
Ray's got jokes. I should make my password Milk Lover 420. That'd be hilarious.
Okay. All right. Cool, man. I'll check this out. I had no idea. This is actually really cool. Yeah, there's so many use cases with Claude now that like you can build a lot of crazy things like yesterday I bought I let me show you what I created.
Yeah.
Let me just log in. What have you created on Claude lately?
I cut down on building stuff. I haven't had the time, but I
Okay.
really like the newsletter aggregator that I built.
Okay.
Is
Yeah, I
it just
saw
gives
that.
me a report of everything that happened whenever I hit it.
That's cool. Let me see.
Yeah, you're on fiscal, so you got to change it.
Yeah.
Because everything backstage.
Yeah, give me 1 second.
Mm-hmm. And I am going to talk about Oracle in a little bit, everyone.
Okay. This is what it was. I don't know if it's going to work right now because the data's incomplete, but basically this was the futures curve for oil. So one of the things I was having a tough time with was trying to find like all the data from the CME group, right? Like the curve for it. It was eventually able to scrape some free stuff and get it for me. Check it out. This is the PNG. Not this. Yahoo Finance. Okay.
Yeah, I wish that Claude had like a folder you could put all the artifacts in. Maybe they do.
Yeah, they probably do. This is the JSX. There it is. Okay, so this is from like the forward curve that I was looking at. This is not live data. This is just the data when I ran it. But what I wanted to do was create this and make it like a live product where it actually does the curve and it kind of shows you like. And one of the things I wanted to do was add a slider here so that what you could do is like slide it and use based on time. You can see like where's the curve moving? Like, is the long end of the curve moving up or down? Right? Is the short end of the curve moving up or down? So like, it was just going to be a very cool interactive feature that like you can kind of use to track this. So like this is from before, so you need to run this over again. But like I said, I wanted to try to make this a live thing, and yeah, I just didn't have access. I mean, there's an API company that provides that data for this. CME Group doesn't, but yeah, so that's one of the things I was going to do. You could also do it through Verse. I'm learning how to do all of this stuff, by the way. So before I just use something like Excel, but this is probably a cooler feature. I did build just a quick HTML website on GitHub. Let me show you. Give me 1 second.
Yeah. Matt and Tevis both build very interesting websites so far.
Yeah, mine is not interesting. It's just an HTML that that I thought was really cool. Just sign in. Okay. Yeah, so I'm getting a lot of value from just trying things out, which is cool. Sorry. Yeah, I was actually really impressed by the thing that what's his name that Matt built.
Mm-hmm.
Like that's really cool. Like he really worked on it, and it was
Yeah, I mean
it's one of those things.
He keeps adding and adding to it.
Yeah. The only thing is I was going to tell him just keep it simple though. Don't add so many things that
that he
it
just
becomes
keeps spending a ton on it. Yeah.
Well, not only spending a ton on it, but one of the things is like you want to create something that's going to actually provide value, and sometimes you need simplicity to make sure that like the value of things aren't just lost, right? So what happens is you can have like a really good product, but if it's really hard for people to navigate because there's just so many, it's so complicated, then people are gonna, they're not gonna use it.
That you built?
So this right here is just like a capital flow diagram of where money is going right now. So one of the things I was going to do is aggregate like public information and take it and basically take like, okay, where is the money actually going? So like venture capital is here. That money is going into AI startup funding, right? Sovereign wealth is going into different programs here, and it's going into like equity investments here. Corporate R&D is going here. Public markets, IPOs are going here. Retail spending is direct. You see like this one directly going to SaaS and API and licensing stuff. And then it's kind of going into the different sources. So this one's like OpenAI. This is going from the cloud, semiconductors, AI agents. So, one of the things I wanted to kind of show people that this AI in like ecosystem, this is where the money is actually growing, right? So some of it's going to productivity gains, some of it's going to new market creation, and some of it's going to like GDP growth and returns to shareholders and investors. So yeah,
Interesting.
cool, right?
Where's the data scraping from?
Well, the thing is, this is not scraping anything. This is just a diagram. The program that I want to do is actually going to scrape the data, load it, and then show us this, and do it over time, basically.
Gotcha.
So Yes, sir. So yeah, I just wanted to show this as a diagram first. So cool, right? Like you can actually see the money flowing in and going to different things.
Yeah, it's
So
very interesting.
yeah, like I said, I'd love to see like the compendium of all the AI spend in healthcare, all the money that's spent in generative AI, all the money that's spent on agents, all the money that's spent on autonomous. And so it's like you click on it and you see like, okay, this is how much money went to this market over this period of time. Like I
I
would,
wonder
that's
how you
the
would
actual
even
goal.
prompt that to get that data.
I'm telling you, you just need really, really good APIs like that have access to crap ton of data. That's why I'm thinking like I need to find a data broker that has like granular information like this. I know Bloomberg does, but I don't know if Bloomberg has any APIs like that to share. At least they're not going to give it to you for a decent price. They're going to literally charge you like an arm and a leg for it. So, yeah. Chris took follow the money seriously. Yup, that's right. Follow the money. Yeah.
Interesting. Have you built anything else? And I said
Uh
that because I saw what you guys said about taking a shot every time I say interesting. So take two.
no, I haven't built anything else yet, but I'm trying to learn. Um like I said, I'm trying to learn how to do this so that I'm not just like telling Claude to do everything. I
Yep.
actually know how to modify things like, to get Polygon and Massive have APIs. Okay, I'll look it up. Thank you, Resen Tel Ella. Yeah.
So I've made so many updates to this, and I added oilprice.com in here. It
Yeah.
saves every edition that I make or that I run on this. It can read it to me, and this is what the actual letter looks like. And I
Yep.
have,
So here's a question.
yeah,
You just run this on Claude every day?
yeah, twice a day.
Well, why don't you just create this and then have it like auto run itself? Like,
That's the next step to have it ready for me at a certain time. But basically, the way that it works is when I click this, I have the chief economist, I have the political analyst, commodity analyst, stock market strategist, earnings intelligence, forward calendar, income and dividends. It all goes to a data verification, and then it goes to an editor in chief that writes the whole thing for me.
just be
And
careful. Just be careful because there's a lot of data that's wrong on a lot of
so
these things.
you can't make it out, but I have the only places it's allowed to look. So it can't do web searches. It only can go to
Yeah.
trading economics, seeking alpha, Reuters, MarketWatch, investing.com, dividend.com, Bloomberg, CNBC,
Yeah.
CME Group, and oilprice.com. It can't go anywhere
So,
else. I have it closed off.
sorry. So I just put the thing in the chat, probably.xyz. That's the thing for Matt. Probably.xyz. I just, no, it didn't let
Yeah,
me put it
that's
on there.
Matt's side.
No, it won't let me put it on. Why doesn't it let me put it on there? Share your referral link. Yeah, it won't let me put it on here. I'll just show everyone. This is stupid. It won't let me put it in the chat. Take a look. This is what Matt put. So it's probably like this. Actually, I have to share the notes. Do notepad. Sorry. It won't let me put the thing in there. Just share that. There you go. Why he had to misspell it, dude.
Probably because spelling it the correct way was taken.
Yeah, but probably that XYZ. Let me see. Go. Daddy. I'm actually, you want to know something? I'm actually working on a stock draft thing with a friend. So I own stockdraft.com.
Look at you.
Yeah. I was like, it cost me a little bit of money, but I was like, just in case, like, this could be an app that we can actually make into something. So I took it. So just in case, like in the future, like we did the stock draft with the Excel spreadsheet, I want to create an app that's specifically built for that. So it's almost like a game where you can play with your friends, where you can create your own team and do all that stuff. So, but let me see probably.com if there's probably.com is probably taken. Yeah, probably.com is taken. XYZ.
So how you
Damn,
feel
that's
about
taken too.
how are you feeling about Oracle tomorrow?
Um, the comments are going to be very important. I think just getting an understanding from Larry Ellison on what the opportunity is going forward, I think is going to be very important.
Yeah.
Dude,
So
how much is this costing Matt? I told him to put this thing behind a paywall, man, because this is probably expensive.
it's definitely going to cost them a little bit. So I freed up a bunch of capital for tomorrow.
Okay.
Or I should say for Wednesday. So my game plan with Oracle is if Oracle sells off tomorrow because debt and capex is accelerating quicker than their profitability. If it sells off because of that, but the earnings story is still strong for next year, I will start buying at 125. I will buy again at 100. I will buy again at 80. At some point, I think Oracle is going to go down. I don't think it's going up tomorrow. I don't think it's going up this week. I think it's going down. And when I think about the rate of acceleration in profitability with Amazon, Alphabet, Meta, and Microsoft, Oracle is a good 2 years behind them. And I think we could see history repeat itself. I'm looking for a really good entry point on them for a 2-year position in it, maybe 3 years. And if it goes under 100, I think you see a lot of people and a lot of funds load up. So tomorrow is going to be very interesting. I think their balance sheet, the debt will expand from 99.8. I think it's going to expand to over 120 billion in long-term debt. Because I believe they tapped the debt market for more than 20 billion this quarter.
Okay.
And I don't think the EBITDA or cash from operations is really going to scale till next fiscal year.
It's got the EMA on here too, which is good.
You took a position in Adobe, right?
Yeah.
They report when? Wednesday? Thursday?
Thursday afternoon.
Okay.
Yeah. I took a position on it. I think it's just oversold.
Their financials are amazing.
Yeah, I think it's fundamentally disconnected. I think a lot of it is just fear of SaaS right now, which is fine by me. It's irrational in my opinion. They're not going anywhere. So let's see earnings. All upcoming earnings. Adobe right here. See? Dude, he really did freaking a phenomenal job with this.
He did.
Let's see. Adobe. If I need transcripts, it goes here to Seeking Alpha earnings. Oh, it goes back to Seeking Alpha. Yahoo. It goes to Adobe right here.
Pedro's in the chat.
Interesting. 2 miss, 1 beat streak. 6 times it's beat in the 7 quarters. Damn, man. I gotta tell, man, I'm very impressed by this. Look at this. Adobe is beat every single time. So estimates were 438. They got 448. This is good to see. He's also got this cool feature where you can post things directly onto like social media. and like, let's see. Yeah.
Did Matt do the
Analyze.
Congress thing yet?
What? Yeah, I think he's got it done.
He did, right?
Congress, right? Yeah, Congress right here. So you can see all the trades that have been made. Like, so you can see like Microsoft, and these are the ones that are there. 45 days. Let's see. Rada AI Corp. These are the ones that Kelly Morrison from from Minnesota bought. Let's see. Let me see if I can search for someone who's bought, like this guy Cleo Fields. Let's see. I don't know if I can search for the guy. I don't know.
Matt's texting you to yell at you.
No, someone's just messaged me. Website investor portal. Sorry, I don't just open links. 13F.
Chris is going to become an early investor, and probably all of us may. Who knows?
I might throw some money at Matt. Be like,
Matty doesn't need our money though.
He doesn't. He's
Matty can fund this
very
all
well
on his own.
Yeah.
But no, he did a great job on it. I think that the Congress aspect's really interesting. Tevis's site came out really good too. I think they both did a great job.
What's it called? Something Panda?
Paperpanda.io.
Let's see.
Yeah, Tevis put a visualizer on the Congress section.
A sharper market dashboard for modern investors. Okay. Trending with smart money. Super investors, Congress. That's actually kind of cool. Bamboo, $5 a month. Panda, $15. Giant Panda for $30. What's with his fascination with pandas?
I don't know. Scroll up though. Click on the button underneath Explore up on the top.
Okay.
And go to Congress Watch.
Okay.
And he actually made it where you can see each one of their holdings. You can click any one of them. So click on any of the blue or red dots.
Oh, that's cool.
And it shows you their exact portfolio.
Okay. Let's see. Like, I'm from Georgia, so let's see Georgia. Georgia's blue, which is kind of sad, man. Let's see. This is too small. It's gotta make these a little bit bigger and this thing a little bit bigger. PA, Georgia. God damn it, man. Where's Georgia? Done. Alabama, Kansas. Hey, yo. What's up, my homies from Georgia?
Just pick any of them and click in one of them.
Okay. Give me 1 second. Just I don't want any of them. I want Georgia. I'm from Georgia. I want to see what my senators have.
Dude, you're from New York.
Fine. Where's New York then?
You can click in a Swazi. Just go straight down from where your mouse was.
It's not there. There's no New York.
In the house. Second line toward the right.
But I'd have to go through their house. There's two, but there's senators in New York. Where are they? Whatever. Fuck it. I don't care. Here we go. Let's do Georgia. Okay, so one of the suggestions. Alphabetize, yes, and you got to make these a little bit easier. Okay, so Austin Scott, who's a Republican. He's buying he sold a lot of GE and GE Vernova in 2025. Okay, show. Wait, this is the only guy? We've got more members than that.
These may be the only ones that are trading, though.
Jim Jordan, maybe. I doubt it. We have a lot of people. California. See, Judy Chu is not the only one. There's a whole bunch of people. You're telling me Nancy Pelosi's not on here? Yeah, this needs work. It looks nice, but it needs work. I'm sure he's working on it right now, so it's
I'm
not
sure they keep both of them keep adding things.
Yeah. Sprouts Farmers Market, who bought? March 9th, Anderson Joel. By the way, did you see Sprouts?
I did not see Sprouts.
Look at Sprouts. When we spoke about it, that was like $60. Since then,
Look at that.
It's starting to come back. It's about up 20, almost 20%.
So, Chris, if you go back to Congress and click on holdings instead of Congress when you're on it.
Okay, so what do? I go back here, right?
Scroll up.
Okay.
So click on Congress.
Okay. I clicked on it, yeah, but it didn't go through. So Congress. Nothing. Let me try here. Reload.
All right, so click on Congress Watch again.
No, it's loading. It's not working.
We broke it.
Did we?
I don't know.
Tevis, why don't you log in here? You try it.
All right. So when you click holdings, it actually shows you the most held stocks through Congress. It aggregates everything and the consensus leaders and recent momentum on stocks. The most commonly held one that's with buys is Apple, Microsoft, and Meta, Nvidia, which is pretty freaking interesting. And then you can look at activity.
Yeah.
It's pretty freaking interesting when you aggregate it this way.
It's pretty cool.
Yeah. And then he did the same thing for 13F funds.
I think everyone joining and using it at the same time is probably
everybody's using it.
All of us.
Isn't it interesting that Congress is buying Microsoft and Apple, and then on the 13Fs for hedge funds, Microsoft is the number one bought by super investors?
Yeah, because it's the easiest bet. You don't even have to.
I'm telling you, big tech is the play right now.
You don't have to be a genius to figure out by Microsoft. Like, there's so many times where you can make money. I mean, it's not whatever. Just buy Microsoft.
I think big tech's the play.
Yeah, I'm working with check this out. I'm working with the guys over at TrendSpider. I'm gonna try to create some cool visual things to show like what I want to do. And I was showing someone from TrendSpider is I wanted to overlay actual equity information and like fundamentals with the chart so that people can see like, oh yeah, like look, there's like a fundamental and a technical disconnect, and that's where like real opportunities are. And they publish some of them on X, but sometimes it doesn't like show up. Just log in real quick.
Chris is going to make a better fiscal AI.
No, I'm not. I really don't want to. I don't care about that. Let's see. I can't show you.
Dookie Pie, why am I supposed to look at Marvell? You've been right on pretty much everything you've said.
He's right. Marvell's probably going to do really well.
I don't follow them. I don't know anything about them.
So I want to create something like this. Similar to this, like you see how they have overlaid the PE ratios right here, right?
Yeah.
So something like this would be good. There's this one thing that they have for like ServiceNow, which I really liked. Let's see, scroll. See, like this is for Adobe. Look at this. So you can see the operating income has been going higher, revenue.
I love that. The fact that you can see the trends on the fundamentals with the chart. I love that.
Yes, and believe it or not, this is actually okay. This is better. Let me show you. Damn it. Where is the like this is the thing for Duolingo, right? And you can see the different things. So I want to actually create content like this to publish on X and Patreon and everything else, so that this way, like when I do DD on a company, I can actually like show like, oh look, this is one of the things that's happening and why this is happening, and you know, Rocket Lab.
Have you looked at Duolingo at all?
I have to a certain degree, but um I'm not interested just yet because I'll be honest, I don't have the latitude right now to do everything. So where's it? And there's this really, really good one on ServiceNow that these guys had. And come on, guys, where is it? Sorry, I know it's there it is. Found it finally. Check this out. So you can see here why you should be buying ServiceNow. You can see that ServiceNow, their earnings have been growing at a nice, healthy 20% year over year growth rate, right? And you can see that since then it's been moving down, and you can see the PE went from 131 now back down to here. So it's a really cool visual to see something like this.
I love that.
You see what I mean? So this is what I want them to show
Can
me how
you
to do.
make that for Amazon by any chance?
I'm going to try. I don't know. There's things that you can do. They have like a feature on there where you can use AI to kind of build stuff like this, but I haven't got it yet. Like I said, I'm working on it with them to try to create stuff like this. But these visuals are immaculate. Like I love stuff like this.
That's a super interesting feature.
Yeah, you know, you can have some from here too, you know. You can have volume that gets put in there. There's a lot of things that you can do with these applications. You just have to learn how to use them and take the time to develop them. So, you know. Yeah, but basically I told him I'm trying to combine fundamentals and technicals and see if there's a way that I can like present it on one thing, or if I have to like create it for every one specifically. And so, yeah, like they have this one for Palantir. Look at this.
So what am I looking at there with Palantir?
This is the 4-hour chart. So if you're trying to trade like on a daily, you could use something like this to see like volume, how much volume, like the candles and all that stuff. You can see where the volume shelves are for certain companies. And like right now, if you look at Caterpillar is trading at the same valuation I was trading at in 2001. And that's when it was rather expensive, right? So the question is, what's going to happen? It's trading above the 200-day, 100-day, and 50-day EMA.
I've never gone to TrendSpider's site. I'm gonna have to take a look at it.
Yeah, no, it's good. It's good. Like I said, they have a lot of great tools. It's just really hard to use it. Yeah.
So what are you doing now? Are you just kind of sitting on what you have? You looking to add anything?
I basically added the cruise lines during this last dip. I have a lot of cruise lines now, and that's it. I like a lot of cruise lines, but then I have like the rest of my portfolio too. Like I have a bunch of Nvidia that I think is going to do fine for the rest of the year. Microsoft, Adobe, Amazon, Norwegian. I have some Fiserv, PayPal. I don't have any Sprouts, which I'm kicking myself for because that was a good one to have. I have some Novo Nordisk, which is not doing too well. VG, of course, Brookfield, Verizon. Yeah, that's about it. United Health. I have a bunch of United Health. I feel like such a schmuck because I was in the money on UNH by like so much, and I didn't sell. I was just like, I'll wait. And the freaking thing corrected because the Trump administration came out and said that they were gonna make some changes to the Medicare reimbursement, Medicare Advantage reimbursement for next year, which I think is going to get re-rated higher. But until then, I don't want to sell break even, because I'm break even on the position right now where I was up a lot more before. I did take some profit on it, so that at least I'm somewhat happy.
Yeah, I haven't really been doing a whole lot, but I am out of service now.
Okay.
I may get back in it. I got out the day it shot up like 10% or whatever it was. And I got to tell you, I don't know if Zeta's going to drop again, but if it drops again, I'm going to buy a lot more. It's over 19 again. They just said they're expanding to Canada. I still think that this is something that I do want to own more of. I'm looking at my list. If QXO goes back under 20, I will buy more. I think QXO is going to get hit in the short term if oil stays here and if we get fears of rising inflation and the potential for only one rate cut this year. Long term, I think QXO is fine. And Oracle is the big one I've been flushing out in my head. I don't own it. And I think if it goes down, it's something I really want to take a long term position in.
Yeah. Okay. Rug pull out of UNH. Yeah, I picked it up in the 230s, so I'm fine. Thank you.
Where is it right now?
It's 289, 290. It keeps waffling between 280s and 290s. So, yeah.
You're fine on that.
Yeah. Yeah. Like I said, I have multiple contracts. I have multiple spreads on it. So the theta decay works for me too. So
did you see what Hewlett Packard Enterprises said?
No, what?
They're targeting 1.7 to 1.9 billion in AI networking orders. They rose EPS outlook as demand outpaces supply. And they're not even a big networking company.
Yeah. I don't know. I think the AI spend definitely keeps at it. I don't know if AI spending is going to go down, but the minute AI spending starts to slow, I don't know if this market can sustain it.
If there's reports coming out yesterday or today that it's slowing, we would have seen one of the nastiest sell-offs.
Well, I mean, we kind of did though, right? When Oracle said that they weren't part of the Abilene, Texas expansion.
Yeah, but that was expanding one data center and it's Oracle. I mean, I'm talking about if Amazon, Alphabet, and Microsoft scale back CapEx. I mean, that would be freaking horrible.
Yeah. I don't know. I'll see what happens on it. Like I said, right now, in my opinion, the best thing to do is just buy the Mag 7 and chill. Just go to
MSFT, man.
Microsoft. That's it. Don't even make things so complicated. Microsoft oversold technically. Fundamentals are fine. They're not going anywhere. Still generate significant cash flow. Still buying back shares. Yeah, their free cash flow is probably dropping from all the AI capex, but that'll be fine. Amazon's another one. You're not going to go wrong with it. So, yeah, I might leave a little early. I am falling asleep right now.
That's fine.
So
you got to.
I will see you guys later. Just looking for opportunities right now. But with all the volatility in the sector, with the Trump administration going back and forth, you just enjoy the volatility. What can I say? Sometimes right now is like the best time for option sellers. IV is spiked so high, VIX is so high right now, you're going to get crazy levels of premium. So right now, guys like TJ are probably like just jumping up and down because they're able to sell some options for super. I mean, you've been doing it with your small account challenge. How's that been going?
So I got caught because I had cash secure puts on BMNR and I wasn't paying attention because I got really busy at work. and they got assigned to me on a freaking Wednesday.
Oh, damn. Okay.
Like that rarely ever happens. And
Right.
I'm down after today, I'm down 7%.
Okay.
I mean, I took a big hit on that, which I'm working my way out of,
Yeah.
but I got assigned 2.5 days early, which really never happens.
What about Matt? How's he doing on it?
He's up 17%.
That's good. And you
Yeah.
guys are you're just selling contracts? Like
No,
you're
it's
just
whatever
selling
we want to do.
okay. So
We
you're
each
not
took
just
10
like
grand and we're just kind of doing things we wouldn't normally do to see if it works type thing.
Gotcha. Okay.
And he was in Symbiotic and he was in something else that got acquired that just kind of hit.
Okay. Gotcha. All right. I'll see you later, man. I'm gonna get out of here.
Later, Chris.
Yep. Take care.
So we got 2 big days ahead of us. We have for the week ahead, Wednesday's CPI report for February. It's probably the most critical event of the week. January CPI was 2.4% year over year, and core was 2.5%. So 8:30 a.m. before the market opens, we're going to see the print, a print above 2.6% year over year would likely, all right, I shouldn't say likely, but it could trigger a bond sell-off with yields rising, dollar strength, and equity weakness. So we'll see what happens. Rate-sensitive growth stocks could get hit. The more important number is the consensus for March because this is a backward-looking metric. I went and filled up today and I paid $2.98 per gallon a week and a half ago. Today was $3.48 at the pump. So we're definitely starting to really see the prices at the pump right now. If oil stays higher for longer, it really could put the Fed against the wall. We don't want a scenario where oil is higher for longer, input costs go up, transportation costs go up. That gets rolled in to corporate earnings compressing and a growth slowdown. That's not a recipe for rate cuts, especially with a new Fed chair coming in. So I really hope this situation gets solved in the Middle East for more than the economic reason, more a humanity reason. But it is important to look at the price of oil from an economic standpoint. Right now, we're at 85.33. I mean, this is a huge reversal today. Huge reversal. So CPI is the big thing this week. And then we got Oracle. You guys heard what I said. Shares are down 50% since September. There's a big concern on return on investment for them as an AI spender and currently a risk-off sentiment. So analysts expect their Q3 earnings to be $1.71 per share, up 16.3% year over year on 16.9 billion of revenue, which would be up 20% year over year. I have no idea what they're going to come in at. I don't follow them that closely. I hate the balance sheet. I hate the fact they're negative free cash flow. I hate the fact that they have negative 80 billion liquidity just from cash versus long-term debt. I do think they're going to sell off. We'll see what happens. I am ready to start a position, though. I freed up a bunch of capital just in case Oracle gives me a really good entry point. And the reason why I am really looking at Oracle, and I do not need more technology. I am very heavy tech right now, but when I look at Oracle, and I'm bringing it up right now on screen for everyone, and they do not report on a calendar year, which is annoying. They report on a June to May cycle. So this year they're reporting Q3. Now they're currently in Q4. So when they report for this year, theoretically they're trading at just under 21 times this year's earnings. And earnings not next year, but the following year is set to expand tremendously. 29 analysts have their 2028 earnings at $10.66, which puts them trading at under 15 times forward. Now, the revenue, we make it just a little bigger. Next year is supposed to grow 30%, and then 32 analysts have them grown by 48% in 28. And then 9 analysts by another 44% in 29. So if I get the opportunity to lock up Oracle for the next 2-3 years, I think that it's probably a play right now. I'm just very worried about tomorrow. Very worried about what tomorrow brings for them. And I don't want, if I miss Oracle, I'm good with it. I got NVIDIA, Microsoft, Meta, Alphabet, Apple, and Alphabet. So I'm good on tech. But if Oracle sells off, they go to 125, 120, I'm jumping in. As long as the investment thesis checks out, I'm more interested in the earnings call than what they're going to put up in profitability as well as their balance sheet. Look, when I see this, 20 billion in cash with only another 416 million in long-term investments, and then 100 billion in long-term debt, that scares the shit out of me. It scares the shit out of me. And I believe, if memory serves me correctly, they issued 20 or 25 billion worth of bonds this quarter. I'm expecting the long-term debt to go to 120, 125 billion. And Oracle's EBITDA and cash from operations is not accelerating right now the way that it can in the future. I think they're 2 years behind the hyperscalers, and that's a good and a bad thing. The good side is when we look at how much their EBITDA is growing, you're not seeing the huge year-over-year growth. I think this can really scale and put them in a really good situation to generate a lot of alpha for investors. But I don't want to buy them unless it's an incredibly good deal. So I want 125 and lower. So we'll see. I don't know what's going to happen with them. I don't have a crystal ball. Doogie Pie says tech will most likely keep running tomorrow. Probably will, especially if oil goes down. Starts to alleviate some pressures about Wednesday, and it puts us back in a potentially risk-on scenario. I mean, the fear index is on pretty much maximum fear right now, so I can see this being a situation where we go risk-on environment later in the week or next week if it looks like the situation is all clear. I don't know when that's going to happen. I don't think this is lasting more than another week. I think that there's too much dependent on the price of oil being under 80 a barrel. And I think that's where we're going to settle. Let's see. Oracle's been too busy with Warner Brothers. I mean, yeah, I guess. You're right. Oracle's not that attractive right now for this year. And they do need rate cuts. I mean, that's another thing. With the amount of debt they've issued in the past 2 years, this is something that if we do get rates down to 2.5%, they can expand margins significantly. So they're spending $3.85 billion, so almost $4 billion a year in interest expenses. They may be able to shave hundreds of millions of dollars or maybe $1 billion from refinancing and issuing new debt. We'll see what happens. There's no wine. There's no wine in there. That is a humidor that I use for aging cigars. I have my desktop humidor above it. That one's the aging cabinet. But I actually stopped smoking cigars. I think I gave Matt and Dougie would know. I probably gave 150 or 200 cigars out on at the lunch we went to before Amit's New York meetup. I brought the humidor that's sitting on top of that looks like a cooler. I brought that whole humidor, and I just told everybody to take what they want. And I told them the only rule is I want no cigars in there by the time we leave this lunch. So I will say I did go to the cigar bar with them and hung out while they smoked. Um, why did I quit? A couple people very close to me got cancer, so I quit. One of them passed away, and one of them is on medication, went through surgeries. So, yeah. Oh, Ray was there. That's right. Forgot Ray was in the chat until I just saw his name. Yeah, he was there. Michelle was there. They hung out. We got Adobe this week also. So this is going to be a very interesting week. We also have, I think there's some type of jobs thing happening this week. I just don't remember what it was. I am not a good role model by any means. I mean, I gave out like 150 or 200 cigars. How much of a good role model could I be? Ray, did Michelle smoke a cigar at the cigar lounge? I don't remember. I cannot remember. Chicken Parm Lunatics. That's right. Chicken Parm Fridays. I do think there's concerns with job losses. I absolutely do. We'll see what happens. Charles, I'm going to plead the fifth on that. Well, Ray, I knew that. I wasn't going to say that. Well, look, today's market rally cared more about oil than the jobless losses. But if you get more companies coming out and cutting and riffing, it could make the XYZ 4,000 person riff look like nothing. And I think that would rip havoc throughout the economy. Yeah, I'm not happy about the UFC White House card, Mamba. I am not freaking happy. You know what fight I wanted, and I always butcher their names. Makiaviv and I know I screwed his name up, and Ilya. I wanted them to fight. It's not happening. So interesting you say that, Carl S. I have an article coming out tomorrow on BMNR. I think at 8:30 in the morning on Seeking Alpha. It will be out. I am still bullish. Yeah, Islam and Taporia. I wanted them to fight. I wanted Jones and I wanted Pereira to fight. I wanted Nate Diaz and McGregor 3. Have I written? I've never written an angry email to IR. No. I think the Paramount Warner Brothers deal is going to be great for consumers if they put everything on the same platform. I think it's going to be incredible. Incredible. I don't get angry. I only get angry when I'm driving. Otherwise, it takes a lot to piss me off. A lot. I'm not making any MLB future bets other than if I was going to, it'd just be the Dodgers winning because I don't think any team can beat them. How do I feel about Connecticut drivers? Oh, you must have heard me going nuts on a midstream. Yeah, the Dodgers are a great ball club. And I'm annoyed at the Yankees. I wanted Skeens. I don't want Garrett Cole. Get rid of him, deal him. I'm going to be really angry if Spencer Jones doesn't make the freaking roster. This kid's a beast. He's the future of the club. I really want him, Ben Rice, and Cam to play the lot this year. They are the future. I haven't been buying any cards recently. I've been focusing on stocks. Shohei's the best player that's ever lived. So it's not even up for debate. Big bad LA Dodgers. So let's do this, everyone. I'm just gonna go through the comments, ask whatever you want. We'll stay on until 10:30. Tommy Dimes, you got the luck of the Irish, and you're not Irish. I don't think you're Irish. March Madness. This is Selection Sunday, isn't it? Tournament starts next week. I am so ready. So ready. Tam, I will see you in LA. Favorite hockey team is the Islanders. Yeah, I knew that, Tommy. Not just because I grew up on the island, but because I used to hang out with Bobby Nystrom a little bit. Ooh, favorite boxer? That's a great question. That changes a lot. I mean, for me, it's either Tyson or Roy Jones Jr. It's one I grew up on them. I do think Lomo is just one of the most underrated freaking boxers there is. And look, I like Triple G. There's a lot of boxers I like watching. Canelo, I like watching. Crawford. Ray, I'm going to watch War Machine. I freaking want to watch it. I'm going to watch it. Ooh, I got Ascending Heroes for 89. I think 89. Gotta look what I sent my buddies. Either 79 or 89. Thank you. The Vlad interview, I think, went great. Super nice guy. Looking forward to the next interview. I don't follow golf that much anymore. I couldn't tell you. Oh man, best UFC fighter, it's John Jones. You know what I was thinking about today? Why does MMA suck so much right now compared to back in the day? It doesn't. I just feel like they have a star problem. I don't know. Why do I feel like the old school, they're not even that old school, but like it was so much better with BJ Penn and GSP and Anderson Silva. I don't know. Ooh, best boxing match I've watched. I'm not sure. Bring back Pride. I'm with him. Mirko Krokot, right, right foot hospital, left kick cemetery. Best pizza on the island. Well, technically Queens and Brooklyn are on the island, so I'd have to go to Farah probably. MMA is the ultimate combat sport. Yeah, I was so amped up when Weidman beat Silva. I was one of the only people that said he was going to do it. Weidman was a freaking dog. Ooh, favorite Rogan guest? That's a great question. I don't listen to Rogan nearly as much as I used to, but I always enjoy when he's got Callan on. I think they're hilarious together. And I like when he talks to the MMA guys. I thought his interview when John Jones went on, that was great. I like when Tyson goes on. Ronda's not making a comeback. She's doing one fight. And if you ask me, I think she's going to mop the floor with Gina Carano. I do not want to see a kangaroo box a man now. Yeah, Jensen was interesting on it. Fighter and the Kid, you mean Abercrombie Fight Club? Come on now. CDDs? Of course I listen to Shab and Callan. I haven't been keeping up with the silver market. I got no idea. I'm trying not to have an opinion on it, except it's hard not to. I mean, I'll reiterate what I said. Any of these guys who think that the government needs their AI models to surveil us are out of their freaking minds. Out of their freaking minds. I think it's something that was dumb for them to get involved with. Just, it's the United States government. Let them do what they want. We all have cell phones with video cameras and freaking microphones in our pocket. Like, what are they? If you're worried about privacy, I don't even know what to say anymore. Favorite golfer is Ben Hogan. Okay, come line is a sucker's bet. It's a sucker's bet. The only reason people like it is because if a 7 comes out and your money's on the come line, you win. But if an 8 comes out, you don't make money. Your money just moves to 8. You got to hit the 8 again. It's dumb. Too many people try saying, and I know, I've read it all. Better statistics because the way the odds are. I don't care. Placing numbers gives you the best odds over the house, in my opinion. It's simple math. You got 6 numbers that can be the point. A 7 has 6 combinations of coming out, 16.67% chance. The second that a point is established, let's say the 4 is the point, You place the 5, 6, 8, 9, 10. You now have 6 out of 30. You have 6 numbers, which is 24 out of 36 combinations, 66.67% chance of one of your numbers coming out. You have a 50% edge over a 7 every time the dice is rolled. And based on the way the odd structure is on placing bets, you need roughly 4 numbers to hit to break even. So, yes, placing, in my opinion, is better than the come line. I may have spent an hour or two at the craps table. Tommy Dimes, do you play craps at all? Because Tommy Dimes, if you play craps, when I come down to Florida, we're going to have to go play craps at the Hard Rock. Oh, boy. Now, this is going to be interesting. Me and Tommy shooting dice. I can't wait. Hollis, you've had an 8-hour crap session in Vegas. Do not bring that up in 2 weeks when I'm in CA. I don't want to end up in Vegas. That's probably better than the stuff I yell out, Tommy. I like 3-card poker. I haven't been playing it as much. I do like 3-card poker. Tommy, you're going to have to explain to me why you play roulette. I won't do blackjack. Tommy, I feel like you bet on everything. It's freaking great. Meet up in Vegas in 27. I mean, I think we can convince Amit to do that, maybe. I mean, that would be pretty interesting. Doogie, you're going to go to Vegas with everybody? Over under how much we lose? Oh, shit. I think it really depends on what if you're looking at everybody that would go on what they're playing. If we're strategic about it, I think we could do well. Bring some tigers. So, Tommy, I spent a year on the subway. Every ride, I downloaded an app and I taught myself how to count an 8-deck shoe. I know how to play basic strategy, or at least I did. I'll tell you, I've never done well at the blackjack table. And I will only sit in the first position and I will only play in the middle of the night or early in the morning when no one else is there. And if I don't know you, I'm not getting on a table. I don't like it. I always get screwed somehow. And I've never really made any money on it. So I am done with blackjack. I like my crap system. It does what I need it to do, and I stick with it. I think Hood's interesting. I think SoFi is undervalued, but we'll see what happens. Tommy, my system's very simple. People don't like it. Pass line, I only will do so I will do odds, but I will go full odds on 6 and 8. 50% odds on the 5 and 9, and 30% odds on 4 and 10, just because of the combinations. And then whatever the point is, I place the rest of the numbers. That's it. And on the come out roll, I take any craps in proportion to what I have on the pass line as insurance. Other than that, you will not catch me doing hard ways. You will not catch me any of that. Those are suckers bets. And while they are fun, they are suckers bets. See, I always want to bet the don't pass, and I won't do it. It's bad mojo going don't pass. I have not started a position in Hood yet. Vlad asked me when I was going to start a position. I have not started a position yet, so we'll see. I wonder if I'm off the wait list yet. Let's see. I'm still on the wait list. No bueno. How do you expect to be off the wait list when you don't own the stock? Because I asked the CEO if he knows anybody that can get me off the wait list. Thought it was being funny. I thought he got a kick out of it. I like it, dude. What price you in at? He checked if I own it. He probably has an alert set up for when I buy the stock, right? Tommy, that no. You have 0 and 00. I am slacking on Hood. I know I am. It's one of those positions. I don't know. I did free up capital, but I'm really interested in Oracle if it goes down. If it doesn't, maybe I'll start a position in Hood. We'll see. I think crypto has a lot to be dependent on the Clarity Act. I have an article coming out tomorrow morning about it. Give it a read. Be on Seeking Alpha, BMNR tomorrow morning about 8:30. I'm still bullish. I was adding, so hopefully I'm not wrong. Tommy, when I went to Borgata in AC, you couldn't find on Saturday a table that was less than 15. The majority of tables were 25 and 50. I try not to, Star, but I do own Enbridge and Bank of Nova Scotia. Silver's up. Oh boy. Tomorrow's going to be an interesting day, isn't it? Crude's at 86. Yeah, but Tommy, you're doing that because you go to the race book, right? I happen to like dividend stocks just as much as growth stocks. Carl S., do you really want me to finish that sentence? Because I can. I'll tell you the next two words are me, cream, and then you can finish the rest. I believe that's a Method Man verse. Wu-Tang. I don't know if we're in stagflation yet. It's too early to tell. I think Amit's going to do a Miami meetup later in the year, and I will be going to that. And I will be going to Florida for work probably later in the year also. I did not buy Hood yet. I'm shook. What can I say? Chelsea's definitely doing Chicago end of May, and I think he's doing Miami later in the year. Yeah, June. He said October. Yeah. I haven't been to Brickell in so long. I'm excited to see what it's like. All right, everyone. We're going to call it. I am actually working from home tomorrow, so I will be live for Oracle. I am planning on doing Oracle earnings tomorrow. So if you're interested, I'll be listening to the earnings call and commentating, giving you my thoughts. Thank you, everybody, for being here. Really appreciate it. This community is amazing. So grateful for everybody hanging out. Glad you liked the analysis. And shoot me some ideas of things you want me to cover. And I got a few things that are in the works. So over the next couple of months, I'm going to be making some announcements of things we're going to be doing. So appreciate everybody being here. Have a great rest of the night. Thank you, everyone. See you tomorrow.